Ready to discover 3 groups of investment tools that can make you rich in 2025? And in this video, I'm not just going to talk about these tools, I'm going to dig deep so you fully understand how each one works. You see, understanding is the secret sauce to success in any field. And trust me, I'm here to help you unlock the secrets of building passive income with these powerful tools. So get ready to fast-track your financial journey. By the way, if you haven't subscribed yet, join our community of over 70,000 people. We're passionate about making finance and investments easy and clear. Don't miss out. Hit the subscribe button and stay in the loop. Now let's dive in. The first group is the stock market, and I want to break down 3 amazing tools available for investing: stocks, bonds, and REITs. Let's start with stocks. Stocks are like little pieces of a company that you can buy. When you buy a share, you actually become a part owner of that company. How cool is that? And it's not just about owning a piece of the pie, it's about growing your wealth. Imagine you buy a share of Apple for $100. That share doesn't just sit there, it has the potential to go up in value. If Apple does well, the share price goes up. You can sell that share for more than you paid for it, making a nice profit. On top of that, some companies like Apple, Amazon, and Google pay their owners a little thank you gift called a dividend. It's a reward for being a shareholder. Dividends are usually paid out as cash or extra shares of the company's stock. They're a way for investors to keep getting rewarded even if the stock price isn't going up. Now let's talk about something super important. When you invest in stocks, it's like hopping onto a roller coaster. The price of your shares can go up and down a lot, sometimes even in a single day. It can be exciting, but it's also a bit risky. That's because the stock market is driven by all sorts of things like the company's performance, the economy, and even the mood of investors. It's kind of like a big guessing game. So how do you tackle this risk? Well, one smart trick is to spread your investments across different companies and types of investments. Don't put all your eggs in one basket. This way, if one stock takes a hit, it won't shake your whole investment portfolio. For instance, instead of buying just Apple stock, you can buy a mix of stocks from different tech giants like Microsoft and Alphabet, that's Google's parent company. That way, if Apple faces a rough patch, you still have Microsoft and Google supporting your portfolio. Now let's look at another exciting option, REITs. REIT stands for Real Estate Investment Trust. It's basically like owning a piece of a building or land without actually having to buy and manage the property yourself. Here's how it works. There are companies out there that own and manage properties like shopping malls, office buildings, or even apartment complexes. Instead of you having to buy and manage an entire property, you can buy shares of that company. And the best part is, since REITs own and manage properties, they have to pay out at least 90% of their profits to shareholders. That means you can get a steady stream of income without the hassle of dealing with tenants or repairs. REITs are traded on the stock market just like regular stocks, so you can buy and sell them through your brokerage account. And the cool thing is you can often diversify your real estate holdings by investing in REITs. You can get exposure to different property types and locations just by holding a few REITs in your portfolio. So it's a good idea to add REITs to your investment mix. And finally, let's chat about bonds. Bonds are like loans that you make to governments or big companies. When you buy a bond, you're lending money for a set period of time at a fixed interest rate. Now you might be thinking, how much do I need to invest to make $500 a month in income? Let's do some quick math. If you aim for a 10% annual return, which is pretty common for a well-balanced portfolio, you'd need about $60,000 invested. That works out to roughly $500 a month in income. So with the stock market tools, you'd need about $60,000 to earn $500 a month. Now let's move on to the next group, cryptocurrencies. I've got 3 exciting tools for you: Bitcoin, Ethereum, and stablecoins. First, Bitcoin. Bitcoin is like digital gold. It's the first and biggest cryptocurrency out there, and many people see it as a safe store of value. Think of it like this. Back in the olden times, people used to carry around wheelbarrows of gold coins. Then they started using paper money as a more convenient way to trade. Now we have digital money in our bank accounts. Bitcoin is kind of like the next step in that evolution. It's digital, scarce, and not controlled by any government or bank. People buy Bitcoin because they believe its value will go up over time. Just like gold, it's also seen as a way to protect your wealth, especially during uncertain times. However, Bitcoin is a bit of a wild ride. Its value can change a lot in a short time. Some people love that excitement, others not so much. Before you jump in, make sure you understand the risks involved. Next, Ethereum. Ethereum is like the younger sibling of Bitcoin. It was created a few years after Bitcoin and is often called the best investment of the decade. It's not just a digital currency. Ethereum is a platform that lets developers build all sorts of cool applications on top of it. Imagine it as a giant digital canvas where you can draw anything you want. These applications can include games, marketplaces, or even financial tools. And the cool thing about Ethereum is that it's not controlled by any one person or organization. Instead, it's managed by a bunch of computers all around the world. This makes it really hard to cheat or manipulate. Ethereum is a bit more complicated than Bitcoin, but it's also known for being super versatile. Developers are constantly coming up with new and innovative ways to use it. Finally, stablecoins. Stablecoins are a special kind of cryptocurrency that is designed to be super stable. Unlike Bitcoin and Ethereum, whose values can go up and down like a roller coaster, stablecoins keep things chill. They're usually pegged to something valuable like the US dollar. This means that one stablecoin usually equals $1 US. Stablecoins are great for a few reasons. First, they're less volatile, so they're a good option for people who don't like the wild swings in value. Second, they're super handy for trading other cryptocurrencies. You can easily exchange stablecoins for other cryptos without having to worry about the exchange rate fluctuating while you're making the trade. Some popular stablecoins include USDT, USDC, and BUSD. Now let's talk numbers. To earn $500 a month from cryptocurrency, you don't need a fortune. With an 8% return, which is quite doable in crypto, you'd only need around $75,000 invested. That's equivalent to about $500 a month in income. And now the moment you've been waiting for, which is the best place to start? Here's my take. If you're just starting out, I'd recommend checking out stocks and REITs. They tend to be a bit more stable, and they offer a nice, steady way to grow your wealth. On the other hand, if you're feeling adventurous and have a bit more cash to spare, crypto could be an exciting addition to your portfolio. Just remember, it's important to spread your investments across different types of assets. So no matter which path you choose, make sure to diversify. If you're interested in taking the first step, I've got some resources for you. Take a look at the description below for some suggested platforms where you can start investing in stocks and REITs. Thank you so much for watching. If you found this video helpful, please hit the like button and leave a comment below. And if you haven't already, don't forget to subscribe. We've got more videos coming your way. See you soon. I have 3 tools that bring in money. Let's explore them today, and I'll share my experience. The first is staking USDT. This is the most reliable and simplest method. It's like putting money into a bank. You freeze your funds, crypto dollars, and receive a return that varies from 4 to 12% annually, but sometimes it can peak at 50%. Yes, it's really high, but it's worth noting that the interest rate fluctuates, and recently it's been around 4 to 12%. The key is that it's done on official exchanges, and they hold more than 98% of funds in reserves. So it's like putting your money in a top bank, and you get hourly payouts directly to your balance, meaning you can withdraw them at any time. Here's the best part, you can start with just $50 and you don't have to worry about losing access to your funds. If you need your money urgently, just take it out with no penalties. Technically, it's pretty straightforward. I already covered it in detail in my videos, so I'll leave links in the description so you can follow along. For me, this tool brings in about $120 a month, and it's the most straightforward way to multiply your money, especially if you have some savings. With this method, you lock your funds for a period and cannot withdraw them, but you still earn an interest rate ranging from 4 to 12%. To take advantage of this, visit the website. Once you sign up, head to Earn USDT and you can stake USDT, which is the largest crypto dollar token. To start earning, click Stake Now, select the amount of USDT you want to invest and the lockup period, then confirm the transaction. After the staking period ends, your USDT will be unstaked and you'll have your initial investment plus earnings. And the great thing is, you can start small with just 50 USDT. Later you can add more to increase your income. you choose the lockup period, ranging from 30 days to 1 year. Longer periods usually have higher rates, but remember, the longer you lock your funds, the less flexible you are with your finances. For example, if you lock up 1,000 USDT for 12 months, you won't be able to use it until the next year. That's why it's important to diversify. Don't put all your eggs in one basket. Divide your funds into smaller portions and allocate them across different terms. By doing so, you can always have some funds ready for unexpected expenses. When setting up staking, double-check everything before confirming, because if you make a mistake, you won't be able to fix it later. Remember, the annual interest rate on USDT averages around 8 to 10%. In simple terms, if you stake 1,000 USDT for a year, you'll roughly earn between 80 and 100 USDT in profit. The second tool is spot trading of crypto. Let me break it down for you. The principle is similar to stocks. You buy a coin, wait for its price to go up, and then sell it. The good news is there's no minimum amount required. You can start with just $10. However, here's the catch. Unlike stocks, the crypto market moves quickly. Prices can change rapidly. A coin might rise by 10% one moment, drop by 50% the next, and then soar by 150% in a single day. Basically, you never know when and by how much a particular coin will jump. That's why success in trading depends on how much you know the rules of this market. Those who understand them well make money, those who just guess randomly lose. If you're new to this, I recommend starting with 5 free course lessons. They'll teach you the ins and outs of the crypto market and help you make your first dollars. Plus, you'll get support along the way. If you prefer a more in-depth approach, check out the closed AGMI Club. With a subscription, you'll get access to training, signals on when to buy or sell, analytics, and chats with experienced traders who have successfully navigated this market. First, you can take a free tour to see how it works from the inside. And afterwards, you can join the latest closed market analysis call. There's also a Telegram chat available. Links to the course and the club can be found in the description below. Now let's talk numbers. How much can you earn with spot trading? Well, that depends on your skills and the state of the crypto market. Some people manage to earn 5% annually while others hit 50%. With $500 a month to invest, aiming for a 20% annual return would require around $12,000. But keep in mind, you won't earn that full 20% right away. It takes time to acquire the necessary skills. And that's why this isn't the easiest method. But once you've mastered it, you can turn it into a passive income stream. Now let's move on to the third tool, which is trading bots. Let me clarify, they aren't magic wands that bring in riches. Instead, they are like robotic vacuum cleaners that follow your commands. You set them up once, and they start working. Trading bots are programs that automatically buy and sell cryptocurrencies based on changes in the market. For instance, if the price drops, they might buy a coin, and if it rises, they sell it. These bots operate 24/7 without breaks or emotions like panic selling. They work based on the rules you program them to follow. I've been using bots for over a year now and have personally earned quite a bit. I started with just $200 and gradually increased my income to $3,000 a month. Of course, it wasn't a quick journey. It took 14 months of consistent work. I'm sharing this not to boast, but to show that it's possible to achieve substantial results with this method. Most importantly, I haven't lost money over these 2 years. Yes, there were times when the value of my investments dropped, but I was prepared for that. One of the reasons why I chose bots is that they allow you to set stop losses, meaning they automatically sell off if a particular coin drops below a certain price. This helps protect your funds in case the market takes an unexpected turn. So let's say you invest $1,000. You can set a stop loss at around $800. If the coin's value drops to that level, the bot will automatically sell it, limiting your potential loss to $200. I've never reached my stop losses so far, but having them in place gives me peace of mind. Even if the coin's value drops below my stop loss, I can sleep soundly knowing that I won't suffer a significant loss. Plus, bots execute trades faster than any person. They make decisions in milliseconds, reacting to market changes almost instantly. And here's another advantage. All your trades are visible on the exchange, so if you ever need to, you can easily review them. Moreover, there's a chat with other bot users where you can ask questions and learn from their experiences. It's a supportive community ready to help. Here's the deal. If you want to try this method yourself, I've got a guide that explains how to set up bots, manage risks, and keep your funds safe. It's all in this video here. Take a look, and if you're still interested, join the free course. You'll learn about the cryptocurrency market, how to buy coins, and more. Plus, you'll have someone to ask questions. So it's a win-win situation. And that's it for today. If you've watched till this point, hit the like button. It motivates me to keep making videos for you. Thanks for watching, and I'll see you in the next one. In the sea of digital finance, many people are attracted to the waves of high profits in cryptocurrencies, but only a few know how to swim. If you're looking for a chance to invest in the crypto world but don't want to take big risks, the video is for you. But first, let's address the elephant in the room. How much money do you need? How does it work? What are the tricks and hidden pitfalls? And most importantly, how to make a profit without losing everything. We've got answers for all these questions and more. Let's dive into the topic. But risks matter. If you manage bots consciously, the main risk is a dip where you'd need to add funds and wait for recovery. If set aggressively without oversight, liquidation, losing all account funds is possible. I run two bots, Bitcoin on $1,000 and Ether on $2,000. In a year, they earned about $15,000, giving over 500% return on the invested amount. But objectively, $3,000 is the trading capital, while I keep about $10,000 in the account as a buffer. During sharp Bitcoin drops, I'm ready to add up to $15,000 to $20,000 to avoid losses. Average return is around 150% annually, so for $500 a month, you'd need about $4,000. It's impressive, but risks are high, so let's move to a balanced option. The third group is dividend tools from Regulate. The crypto world is vibrant, but stability matters too. I added tools with regular payouts, every 2 weeks or monthly, independent of crypto markets. Personally, I invested in an auto fund, commodity fund, and mining fund. 3 options on the Regulate platform, where I've put over $100,000. The platform has been operating since 2016 with apps on App Store and Google Play signaling reliability. Let's run through the tools and terms. You join the platform, register, and go through verification, a strict process that ensures transparency. You can deposit and withdraw using various methods. All tools are in the interface, but I focus on those offering dividends. Start with the auto fund. Check it out, and here's what matters. There's a return calculator to assess profitability. Key points. Minimum investment is $5,000, term is 1 year, dividends are monthly. The auto fund is managed by Timur, whom I know and chat with regularly. Friends bought cars through him. I ordered one myself. As both a client and investor, I'm satisfied. The team is reliable and responsive. I even visited their lot to see the process. Review the terms. It'll all click. Average return is about 34% annually, with 30% as the platform's fee. Next is the commodity fund, minimum $500, term 1 month. They profit from gold arbitrage, buying and selling in different places. Operating since 2022, returns vary, averaging around 48%. Plus, you can withdraw after a month if needed. Fee is 30%, no major pitfalls. Lastly, the mining fund, my experiment. Entry is $50, great for small starts. Return is about 72% annually, but the term is 2 years with a risk. Miner prices in 2 years are uncertain. But let's shift gears and dive into our main topic. We've got 3 paths: risky, moderate, and conservative. Each has its own pros and cons. For the most accurate info, check out the links in the pinned comment below. The risky route offers sky-high returns but comes with big risks. Imagine investing $500 a month and earning 150% annually. That's like turning your $6,000 into $15,000 in a year. But here's the catch. There could be dips when your bot might lose money. To stay afloat, you've got 2 options. First, keep adding money every month, come rain or shine. Second, boost your bot with an extra $15,000 during dips to avoid losses. Now here's the real talk. This strategy works if you're playing the long game and have a big bankroll, but for us, it's a bit too spicy. Next up is the moderate path. It's about smart choices and steady growth. Here's how it breaks down. With $500 a month, you're looking at an annual return of around 50 to 150%. That's like turning your $6,000 into $9,000 to $27,000 in a year. This approach is low risk, meaning you won't lose your initial investment, and it's super flexible. You decide when to cash out. On average, you're looking at around 9% annual return with a 30% fee, which is about 6.3% annually. That means you'd need $16,000 for a $500 monthly investment. Finally, let's talk about the conservative route. The idea here is simple. It's all about making money without taking any risks. Your initial investment stays safe, and you earn a nice little income every month. But there's a catch. The returns are modest compared to the other options. If you invest $6,000, you're looking at around $218 a month. That's about $500 a year. So if you're okay with that, you'd need about $12,000 for a $500 monthly investment. So which path should you choose? Well, that depends on your style and goals. Are you a thrill seeker who's not afraid to take risks and dreams of hitting it big? Go for the risky route. Or if you prefer a steady, predictable journey with some room to grow, the moderate or conservative options might be your jam. No matter which path you choose, remember to stay smart, diversify, and keep learning. And here's a bonus tip. Want to learn the ins and outs of crypto trading? Check out the crypto courses. These courses are designed to guide you through the world of crypto, sharing valuable insights and practical strategies. Whether you're a beginner looking to get started or an experienced trader wanting to sharpen your skills, these courses have something for everyone. Don't miss out on this opportunity to level up your trading game. Remember, in the world of crypto, knowledge is power. Stay curious, keep learning, and always be prepared. Thanks for watching and happy trading.